In this tutorial of MetaSwing for Bloomberg, we're going to cover the complementary indicator for MetaSwing Extremus, which indicates overbought and oversold. Here we have a screenshot of the VIX. This is the daily time frame. In the price pane, we have the MetaSwing suite of tools which are associated with volatility-based support and resistance. So we have the in-bands, and we have the projected support and resistance lines. In the bottom pane, we have the Extremus indicator. And as you'll notice, Extremus is made up of two indicators, and they work in concert. And this is what makes Extremus different than other momentum indicators. So let's look at the individual parts. First, there's the oversold indicator, which is the blue line, and it's indicating just that, when something is oversold, for example here. Also, we have the overbought indicator, which is the red line, doing just that. Now the main difference is that because we're measuring both aspects of overboughtness and oversoldness, we're able to look for extremes in both conditions. And this is what sets Extremus apart from other indicators. Additionally, the mathematics that go behind the overbought and oversold indicator are trend compensated. So that means that this indicator avoids being overbought or oversold for extended periods, and this tends to happen when you have an extended rally or an extended sell-off. And you'll get an indicator that might hug oversold or overbought region for a while. In addition, the Extremus is able to, though it's bounded by 0 and close to it on the downside, it's unbounded on the top. So these peaks that are measuring are volatility, and it's measuring, you can contrast that with different look-back periods. We'll get into this more in the next slide. Here we have a screen capture of the VIX. And the reason I wanted to use the VIX is to demonstrate the robustness of the MetaSwing suite of tools. At the heart of MetaSwing is volatility mathematics infused into technical analysis. And so what that means is that it's adaptive. Since it's adaptive, that means that you can map it out across time frames and across asset classes without any tweaking involved. So MetaSwing is not just an equity tool. It can be used for FX, it can be used for bonds, it can be used for futures, etc. Now, the MetaSwing suite of tools have been responsibly tested and are meant to give you an edge, so they're all statistically valid, and they're done so using the MTA best practices of testing. And this means that all these tools have known tendencies and probabilities, and the nice thing is you can base your strategies around those. Now let's go ahead and take a look at using these known tendencies in the Extremus indicator here. If you look at the example on the left, we see that the VIX is at an extreme, and this is connoted by the piercing of the upper end band. Now, if you recall, the upper end band is meant to be, or the end bands in general, meant to define the playing field. And they're also, unlike other bands you might have seen in technical analysis, in that they are meant to be pierced only during a significant event. So here we have price identified in the extreme. In the indicator pane, we see that both sides of the indicator, both overbought and oversold, are in an extreme. Now, overbought, which is in red, is below the signal line. This indicates an extreme condition. Its tandem indicator, oversold, is also in an extreme. Now, how do we know this? We can follow the blue arrow to the left and compare previous peaks. And so we see that this current peak is at least as high, if not higher, than previous peaks over a look-back period. So here we have a trifecta of extreme price and extreme overbought and oversold readings to combine for high probability reversal. This is exactly what happened. Looking at the example on the right, we have the exact opposite condition, where we have price at a relative low, prices approaching quickly projected support and resistance, as well as a rising in-band. Now, if we look in the indicator pane, we see that oversold is reached below the signal line. This represents an extreme condition, as well as its tandem indicator, overbought, is also an extreme. Now, the same way of deducing this is by following the red arrow across and seeing that no red peaks have been this high during a previous look-back period. you have to go back quite a ways to shortly after the previous reversal. So here we have again extreme reading in price and overbought and oversold to set up for a trifecta of a reversal in price to the upside, which is exactly what happened. In this example, we're going to look at the U.S. government 10-year yields index on the daily time frame. First things first, we're going to show you how to turn on and off the tools within MetaSwing Suite. Right-click on the indicator pane. You want to highlight the security, highlight MetaSwing, and then select settings. You get a nice pop-up box. There's no jumping around between screens to try to add and take off indicators. Everything can be done just by simply checking the box. Now what we're going to look at here is we want indication of trend. So we're going to select the trend wave strength indicator. And we're also going to indicate that we want to look at extremis. Select update. And we're going to rebuild the chart. Now we're going to look at two different ways you could trade on this example. One is that you may want to do just a single trade. And so there are a couple of things you can do. You can use the old school method of using your eyes to look at price as well as an indication of an extreme. And I'll use my tracker here. So here we have an extreme reading of, we have stock that is overbought and oversold, extreme on both sides of it, as demarcated by overbought being below the signal line and oversold being an extreme peak. If you look back across at this level, there are no previous blue peaks. Now, the nice thing is you can actually look at these indicators here for exit short and exit long. Exit longs are red. These connote things that your eye probably couldn't see, and so we're looking at similar conditions that you could use based on extremes. And so let's look at an example here. If we were looking to build into a position, and so here we're building into a short. One thing we would look at is an indication of trend, and we can see that by the trend wave, we've had, by mid-May, we've had 4 periods where both the trend wave and the swing component are both negative. Now, trend wave is predictive, forward-looking. It's not looking backwards. We're not using moving average crossovers, etc. We're using advanced quantitative analytics and also technical analysis to forward project where a trend will be in a high probability. Now, just so happens that the first signal we get from extremis is an exit long, and this is actually right smack against support and resistance. So we can lean against these 5-6 SR lines and take a short, and it worked out pretty well. You can follow the eye across, and you can see that you could, if you wanted to, you could wait until you're against support and resistance to add to your positions. If you're building into a position, you may not want to wait for support or resistance. You might want to just go ahead and simply take a trade like this one here. Now, one thing that you can do, and we'll look at this in other examples, is that because MetaSwing is fractal, you can, if you get an indication of overbought or oversold extreme indication, then you can actually go scale in or scale out to a higher time frame or down to an intraday time frame and look and see if perhaps you're leaning against intraday support or resistance. In this case, resistance is for shorting. But if you do have an indication of that, you can do it. If you have multiple time frames lining up with resistance, that's even better, even higher probability scenario. So far so good. We have plenty of other times that we can add to our position, both here and here. So in just before July and mid-July, and then also again in August. And then before we finally get an indication of a weakening of trend here by looking at the trend wave weakening, and we also begin to get extremes in the other side. And then finally, we have an extreme condition where oversold has reached below the signal line. And then eventually we have trend wave going completely neutral and then switching to positive. In this last example, we're going to look at the Euro-US dollar cross, and this is on an intraday basis, specifically the 120-minute chart. Now, on this chart, we have extremis in the bottom pane. We also have trend wave indicator, giving us an idea of predicted trend. And then we also have in the price pane, we have support and resistance, both dynamic, which is the in bands, and then also support and resistance lines, which are projected. Now, the nice thing about momentum is that it gives you an indication of trend change, right? But trend change can sometimes mean sideways, a la the first two examples. So here we have an example of extremis being identified by an exit long. Now this is nice in that you can see this in that we've shaded the below zero line so you can point out the extremes in one of the indicators. It doesn't always guarantee that the other tandem side of the indicator is in an extreme position, but it helps identify it a little quicker. Even quicker yet is using the computer. Computers, I don't have to say, can identify circumstances that your eyes just can't. Or perhaps faster, and then you're more nimble to take advantage of that opportunity, especially in real time. Now with keeping ahead with our idea of marrying momentum with support and resistance with trend, we get high probability scenarios. So here we have an example of an exit short. Trend moves sideways after a sharp move up and is bumping along resistance in the form of our SR3-4 bands. Then price plummets, and then we get an indication of an extreme and a trend change in the opposite direction, which is, of course, sideways and moving along, volatility-based resistance. Now this is in the form of the SR5-6 lines. Again, the trend is down. We get an indication of an extreme move up, and then if we wait until resistance on the 3-4, we have a nice short opportunity as well. Now the interesting thing and what sets extremists apart, besides not hugging an extreme level of the range, we're not hugging overbought or oversold during the trend. It's been trend compensated, but these signals in and of themselves also have a positive expectancy. So marry that with support resistance levels, and you get a couple nice things. For example, on this short here, you're looking to go short. You have clearly defined risk in where you want to bug out of the trade. So you could take a short here at 1.4364. You could stop yourself out at 1.4413. This is an ATR range, and then you have, looking down in real time, you've got about a 5-to-1 reward to risk ratio, down to your target of 1.4097. So this is a nice way that you can use objective support and resistance along with momentum. Carrying our example forward, we have an indication of an extreme low. If you wait until support, again applying the risk reward, you have approximately 5-to-1. You weren't stopped out, and you have a nice, you hit your target and then some. Here's a summary of best practices for extremists and some of the concepts that we've covered in this video. Thank you for your interest in MetaSwing and for taking time to watch this instructional video. Here's our contact information. Don't hesitate to reach out if you have any questions. Good luck and good trading.